Good morning, guys. This is Teacher Patty. Welcome to my. Should I say good morning? I think hi is much better because maybe you'll be listening to this in different times of the day. Hi, guys. This is Teacher Patty. We're still continuing with the conceptual framework, and now we're talking about liabilities. Remember, ladies and gentlemen, we're looking at liabilities from the 2018 conceptual framework perspective. When you're tested in your exams, you'll be expected to reproduce the definitions as they are given to you. So you can't use the 2010 conceptual framework definition. Okay. So a liability. So what is a liability? This is a present obligation of the entity. So the entity must own this obligation, or this obligation must be in the name of the entity to transfer an economic resource. And remember, we said an economic resource is a right that can produce, that is a probability, or that is probably to produce economic benefits and as a result of the past event. So now let's explain this in detail. Remember, guys, I encourage deeper learning. So present obligation of the entity, a legal duty or responsibility that an entity has no practical ability to avoid. This could be a legal, constructive, and conditional obligations. Now, I always do this with a show and tell. I love Mr. Price, as you know. And yeah, Mr. Price, maybe. Mr. Price, you should be sponsoring my videos. Talk for another time. Okay, so I'm looking at the financial statement for Mr. Price for the year ending 2021. They have something called here lease liability. Okay, it's under non-current liabilities. So they have something called a lease liability. How does Mr. Price have something called lease liability? Many a times, you will find Mr. Price within a shopping center or within a shopping mall. Sometimes you find it in a standalone shop in a town, but many a times, Mr. Price is either in a shopping center or in a shopping mall. Okay. Why am I making you think what you know, to maybe rethink what you know? Let's take a practical case of Mr. Price at Mall of Africa. Mr. Price is renting this space at Mall of Africa. Mall of Africa is not owned by Mr. Price, or Mr. Price doesn't own the shop at Mall of Africa. So we need to understand who in the grand scheme of things then owns the Mall of Africa if Mr. Price doesn't own their section where they have a shop. So I just Google it now. It's Attack Ltd, owning 80% of the mall, and Atterbury Property owning 20% of the mall. So our favorite guy here doesn't own the space they're operating in. Mall of Africa is owned by Attack and Atterbury. It's not owned by Mr. Price. So Mr. Price has to go into agreements, long-term agreements to rent the spaces where their shops are located. So lease agreements, ladies and gentlemen, in malls, it depending on the mall, they might be working close to what we know rental to be, and they might be working differently to what we know rent to be, and there is down payment of certain amounts and all. So the lease liability, it's coming from the long-term rentals Mr. Price is obligated to have at Mall of Africa once they enter into an agreement. You know, when you enter into a lease, ladies and gentlemen, especially a business lease, you can't be going on a month-to-month lease. That can be arranged under extreme circumstances, depending on how busy the shopping center is or the shopping mall is. But usually, when you sign a lease agreement for business, it's like 12 months, 36 months, 24 months. So you're already obligated to rent this shop for the next 5 years. We are obligated to rent this shop for the next 10 years. So you already have a liability. So now do you understand what is called the legal responsibility that an entity has no practical ability to avoid? So take the Mr. Price case we're talking about. If you're entering into an agreement that you're going to rent a shop at Mall of Africa, the square meters for that shop at Mall of Africa is Mr. Price for the next 5 years, you've got no choice. Like it's 2023, so it means you're gonna come out of that contract after 5 years. So literally, you don't have the ability to avoid the rent. Whether people are coming to buy from your shop or people are not coming to buy from your shop, literally, you do not have the ability to avoid that obligation. So you must remember, ladies and gentlemen, this present obligation, it can be legal in terms of a, a legal agreement. Think of a lease. A lease is a legal agreement. It's a contract. So and that contract is binding, constructive. This speaks to businesses that have to work that work with nature, or they work against nature rather. So after a certain after business operations or extractions from the earth have been done, then the land must be rehabilitated. So that is a constructive obligation. For example, Kumba iron ore, when they have to dig and find something somewhere, some mineral somewhere, they have to rehabilitate the land. You can't just get resources and then you make money and you walk away. The land must be rehabilitated. And some obligations can be conditional obligations. So this is depending on a certain event happening. For example, if a company is sued, if Mr. Price at Mall of Africa is sued by a customer that walked in and they didn't even see there was water spilled on the floor and they break their ankle, and then Mr. Price now is sued by the client. And then Mr. Price is waiting for the lawsuit. Does it rule on their favor or does it rule on the favor of the client? What if the client spilled the water? They walked in, Mr. Price carrying a bottle of still water, and then they did not notice that they spilled the water and then they tripped and fell. Is it Mr. Price's fault or the client's fault? Or the client can say, no, I found the water there. So the ruling might be for the client or for Mr. Price. So this is a conditional obligation. So guys, you must remember that, and it's going to come out in your tests. This is where lecturers play. They play in the gray areas. So you must always have that thing in mind. Okay, maybe I'm not going to be given a scenario that is straight cut. I'm going to be given a scenario that has lots of hazy things that are put there to destabilize my understanding of the concept. You must know that present obligation sometimes is not clear. Sometimes it's dependent on a ruling. And you can't say, no, we do not, this I cannot recognize as a liability. You must recognize it as a liability. Okay? If you can prove the conditional obligation. Then it says to transfer an economic resource. Transfer of the potential, the transfer of, okay, it's a potential transfer of the cash. So this refers to when there's a lawsuit against the company, Mr. Price, and then they say if the customer wins this case, we'll be obligated to pay them 300,000. Okay, so that 300,000 is a potential cash transfer, but sometimes there's an actual cash transfer. If in terms of a loan, in terms of a credit card, company credit card, in terms of a loan, in terms of bank overdraft, in terms of income received in advance, the client can still request the money back, and then, or it can talk to the transfer of rights the entity has over the object. This is obviously, this speaks to the economic rights. It speaks to uh, the company having to meet monthly payments to service the obligation. Okay, as a result of past events. So the company or the entity must have obtained the economic benefit or taken action or entered into an exchange contract. As a result, the entity will have to transfer the economic resource that it would otherwise not have, that it would otherwise not have had to transfer. So guys, let's go back to the Mr. Price case here. Mr. Price says, I need a shop at your space. Give me 7 square meters. Mall of Africa, and Mall of Africa says, okay, we'll give you that at a lease agreement, but then you're obligated to pay so much per square meter for so many years. Okay, so then the Mr. Price representative and Mall of Africa representative, they signed that. So that signing, that exchange contract that was signed at a certain date, validates this obligation. There's consent, there's an agreement that we will be obligated to pay rent for the next coming, uh, for the next coming number of months. So this is as a result of that contract that was signed, that exchange that was entered into. Okay, so ladies and gentlemen, I hope you never ever struggle recognizing a liability. So remember, a liability can be a provision. A liability can be a contingent one. So those I will explain in a separate video. Thank you guys. Bye.